Hi, this is Sean Hyman from MyWealth.com, and I just want to talk to you about today's blog. I want to look at stocks that prosper in recessions, because a lot of people think, well, we've got a recession, so no stocks prosper, right? And my answer to that is wrong. Yes, most things do not prosper. That is correct. Most things are downtrending on the charts. Most corporate earnings are eroding because of a recessionary time. I would not take somebody to task for that, but there are certain sectors of the economy that do prosper. You've got to hunt these things out because they're not always vivid and at the top of the headlines on the news, but yet they're there. And I want to focus on the auto parts industry because Obama and Bernanke both have recently spoken, and they both confirmed that things are still slowing down. They're going to be slow for a while. The recovery is going to be gradual. The recovery in the economy is not going to be quick. This thing could last through 2009, possibly into part of 2010 even. We're looking at a slowdown that could last a while, and I think that's why these auto parts stocks companies that have started to flourish, I believe, have legs and can flourish even further. I mean, after all, if you think about it, you've got Toyota, Honda, the Detroit automakers, all of them in the same boat. I mean, they've all hurt recently. They've all been bleeding in their auto sales. Japan has even had net loss in their monthly exports. That's the largest on record this past month. And so, it's just bleeding across the board. And so it's not just an American thing, it's really a whole auto industry thing at this point. And so if you're not, as an individual, buying a new car, what are you apt to do? You're apt to repair that car. As a corporation, if you're not looking to buy a new fleet of cars, what are you going to do? You're going to repair the fleet that you have. And so in tough times, when you're tightening up the wallet, it's much easier to avoid a big ticket item, a $15 or $20 or $30 or $40,000 car, with repairing a car. And yes, maybe it is $1,000 or $2,000 or $3,000 or whatever dollars, but it sure beats the huge ticket item of $15 to $30 or $40,000 for a whole nother vehicle. And so they can get more life out of the vehicle before we go to the next recession. And so I want to look at these three companies because I put here Detroit and Japan's loss is their gain. And of the auto parts stocks, I really like three of them. Three of them catch my mind. There are more than this, obviously, but these are the three that rise up on my radar screen. First one is O'Reilly Auto Parts, O-R-L-Y, and it's hitting a new 52-week high right now. There's not many stocks that this is happening in the whole stock market. And so there's a lot of fresh buying that's going on here that's pushing this up. Obviously, there's more buyers than sellers. That's why it's hitting new 52-week highs. And investors, hedge fund managers, mutual fund managers alike, are all pouring into these type of stocks right now because they're defensive plays. They know that America and even those around the world are going to make good with what they've got rather than expanding onto new purchases. And so AutoZone, I believe, is another one. AZO is the ticker symbol there. It as well has recently hit a 52-week high. Again, not many stocks, in this boat, in this category of hitting 52-week highs. As a matter of fact, you can go to a lot of stock sites that show 52-week highs and lows, and you'll see like 3, 4, 5, 10 stocks sometimes that are hitting 52-week highs, and hundreds, if not more, that are hitting new fresh 52-week lows. Matter of fact, in most mutual fund screeners, you won't find hardly any funds that are hitting 52-week highs that are long only. Now, sometimes you will on short funds, but not long only. So the trend is largely down. So when you see things bucking the overall trend, it's a very big sign of strength. The final one is Advanced Auto Parts. AAP is the ticker symbol there. And while it has not hit a new 52-week high, it has broken a downtrend on its chart, and it's also instituted a new uptrend as of last October. So that ought to ring a bell. That was horrible months, and when many were just, the bottom was falling out, money was starting to flow back into this auto sector. Has from October steadily all the way through till now on this company, and I believe that will likely continue. Do your own analysis, take a look at these stocks, see if you see the same things, see if you feel the same way. If you do, take a look into them. By the way, if you want to learn more about how to invest in stocks, when is the best time to buy, sell, fundamentally, technically, if you're looking at ETFs, mutual funds, whatever the case may be, check into our investment course. It's only $25. It's online, so you can take it in your spare time when you're off. You'll have live instructors there to get back to you to answer your questions. So I mean, it's full well worth your money to get a great investment education. This is something that everybody needs, even if they have somebody that's investing their money for them. You need to know what your broker's investing in and have a background enough in it to know whether it's a wise decision or not, whether you're actually the one pulling the trigger on those trades or not. Thanks so much for joining us today, and see you at our blog at mywealth.com/blog.